Good afternoon. Thanks for joining us today. We have a presentation with Val-d'Or Mining Corporation. CEO Glenn Mullan's here to present. This is a new story to our network, and I will just add an extra disclaimer that I am a director of this company. Our usual disclaimers are the forward-looking statements, which you can find on the presentation on the company's website. The format of the presentation will be, as always, an overview of the company and then a Q&A section at the end. So if you have any questions, feel free to input them in the Q&A box at the bottom of your screen, and we'll get to those halfway through the presentation. With that out of the way, I'd like to introduce Glenn Mullan, CEO of Val-d'Or Mining Corp. Hi, Glenn. Thanks for joining us today.
Hi, Deborah. How are you doing?
I'm good. I'm looking forward to hearing the full overview. You've come off a couple of big successes this fall, so looking forward to hearing a bit more about those and your background. So maybe I'll let you just take it away. Tell us a bit about Val-d'Or.
All right. And thank you for that. And thank you, Deborah, from Adelaide Capital, for setting us up and creating this opportunity, along with a whole bunch more that are going to start to flow through January and through the next few months. So thanks for all your work in the background on this as well. Really appreciate it. Because Deborah told me to say a few words about myself to kick things off, and I usually don't do that and kind of ignore it. I'll just tell you that I read a book when I was 17, and that's it. There was only one thing I ever wanted to be. Couldn't play in the NHL, not good enough, so it had to be a prospector. It was Klondike by Pierre Burton, a great Canadian writer from Dawson City in the Yukon. And just the images that filled my head when I was 17, that's the only thing I ever wanted to do. And became a geologist and have worked pretty much self-employed from day of graduation, first with Canadian Royalties Inc., which was listed while still in university, and then Golden Valley Mines and Abitibi Royalties, and now Val-d'Or Mining Corp. So I am anxious to get on with the story and tell you a little bit more about some of our strategies and the things that are common that'll resonate, hopefully, with some of the investors. I deliberately always leave the disclaimer slide up longer than most of my peers, mostly to remind myself that our information isn't just supposed to be timely and well presented, it's supposed to be accurate. And you should never be shy to hold management accountable, especially for anything misleading and those always dangerous forward-looking statements that are hard to stay away from. But be that as it may, don't be shy to hold us accountable. And I promise not to make too many forward-looking statements that I don't think that we can meet. So here we are. The business model is really shown on the left in these two block boxes. Project generation, the world is full of project generators. I think that was Rick Rule that kind of coined that term. We are a project generator, but more important, we create royalties. And the royalties are created in our own properties. And that's something that's evolved over a 20-year period, where originally we would stake properties, retain an NSR, hopefully get some cash payments and some share issuances, equity from the earn-in partner. And that kind of evolved over the years as we became public companies and as the companies did more and more transactions and the type of ventures that we do, the type of vestings that we do. To my knowledge, they're quite unique in the industry. So it always starts with grassroots ideas, conventional strategies. In the Abitibi Greenstone Belt, we work in the Destour Porcupine fault zone, the Larder Cadillac fault zone, and various untested airborne anomalies. And why untested? Because we like grassroots. Every great mine, every great discovery story started with grassroots. And of course, most of them fail. So it's a numbers game. We need to have a lot of properties. And at this time, Val-d'Or Mining Corp has about 50 properties in its stable. We try to enhance the properties by spending as little money as we possibly can from our own treasury. Rare and few are those properties where we've spent more than $100,000 on the properties. We typically spend about $100,000. We find a joint venture partner. The joint venture partner spends in the millions. And that's been the strategy for more than 20 years. We spend modest amounts. We find partners that are financially better equipped than we are and that can afford the really expensive parts of exploration, namely drilling, trenching, feasibility studies if the properties merit, et cetera. And all of that because our exit strategy is always based on retaining NSRs or free carried interests, along with shares and equity in various other companies. So this takes us back to our roots. And there's the broken down prospector and three of our companies that have all been involved in accretive transactions. So Canadian Royalties was actually listed on the old Alberta Stock Exchange, if anybody even remembers that, the ASE. And at the time that we were taken over by a Chinese metals company, nickel company called Jialanjin from Jialan province in China. By the time we were taken over, it was in a $192 million transaction. That was a hostile transaction. So a lot of lessons learned about how to prevent that from happening again. And I think the big winners in that lesson were the shareholders of Golden Valley Mines and Abitibi royalties, because we definitely were worried about losing the Abitibi property in a hostile transaction. And everything that Golden Valley did for the last decade was about trying to prevent any form of a transaction that did not go through the front door. And so those three companies have done fairly well, very well for the shareholders of record at the time. Golden Valley's closing price when it was taken off the board was over $11.50, considering we were listed and did our IPO at 15 cents. That's a quite good track record. Abitibi royalties was over $26 when it was taken out. Both of them were taken out in the month of November 2021 by Gold Royalty Corp. So Gold Royalty were the buyer. And of course, they wanted the Malartic asset, the NSR that was held. And some more background on those companies, Canadian Royalties, Golden Valley, Abitibi, substantial transactions. Abitibi and Golden Valley together, because they were both bought together as part of the same transaction, that was over $500 million in value. And so our shareholders did very well out of that. And we're certainly hoping to replicate that success with Val-d'Or Mining Corp. And I should have told you that, I'm going to go back one slide if I can. I should have told you this is the fourth time that we're using the same business plan with Val-d'Or Mining Corp. It started with myself as an independent prospector, acquiring over 122 NSRs. Those NSRs were paying annual advance on royalty payments while I was going to university. That was kind of my summer job. And those 122 NSRs were vended into Canadian royalties, and that was its qualifying transaction. That was its going public transaction. And Canadian royalties did find a mine in Northern Quebec, nickel, copper, platinum group elements. And then that business plan, after the hostile takeover, was imported into Golden Valley Mines, who continued staking grassroots properties, constructing transactions with arm's length joint venture partners, and ultimately Abitibi Royalties was fortunate enough to have some great success on the Malartic CHL property, the property that's immediately adjacent to the giant open pit in Malartic, operated by Agnico Eagle and Yamana. And in fact, the Abitibi property, dead center, bullseye in the middle of it, would be the shaft that is being sunk in the Odyssey zones, Odyssey North and Odyssey South. And a lot of the good things that have happened, the $1.7 billion development, most of that is actually on the Abitibi property. So same business plan, grassroots claims, finding arm's length joint venture partners. And we do that because we want to avoid dilution to the share capital. Everything we did with Abitibi and Golden Valley was about avoiding dilution to share capital. And why would we want dilution when we were the largest shareholders? The board and management, along with some of our institutions in Montreal, the Quebec government institutions, La Caisse du Dépôt, SIDEX, FTQ, to name but a few of the Quebec funds. They've been great supporters all the way through. So we don't deviate very often from our home base. We really work closely, aggressively in the Abitibi Greenstone Belt, primarily Quebec and Ontario, or from Chibougamau, Quebec to Timmins, Ontario. That's really the epicenter for our geological network. Main reasons being we're based in Val-d'Or, Quebec, hence the name of the company. Suppliers, services, contractors, geologists, assay laboratories, drilling companies, they're pretty much all based in Val-d'Or, Rouyn-Noranda, Timmins. And so it's a great place to operate a junior mining company that's aggressively looking at grassroots properties. And we work in the far north, in northern Quebec, really in the nickel domain again, close to Canadian Royalties and Glencore the Raglan mine, and in the Ring of Fire in Northern Ontario, where we've done some transactions with some private companies that I'll talk about a little bit more. And if you add up those properties and property assets in Quebec, Quebec North, and Ontario, including McFold's Lake, it's around 50 properties at any given time. There's usually some recycling going on as we drill them and kill them, as we test various properties and drop some. We're always aggressively staking and acquiring new properties in those two provinces as well. So very simple business plan. That's a little better detail in the distribution of the properties in Quebec and Ontario. I never miss a chance to affirm some of the production statistics from the Abitibi Greenstone Belt. You know, that provincial boundary between Quebec and Ontario was surveyed in the early 1900s, 1904, 1905, something like that. And it's amazing how, in terms of dollars, it's captured almost 50-50 between Quebec and Ontario, the value of everything produced. It's also true for ounces of gold, pounds of copper, pounds of nickel, pounds of zinc. The absolute dollar value of all the metals produced in Quebec and Ontario is almost 50-50 exactly between the two provinces. So we've always been very aggressive at working in both. And typically at one time, snapshots going back 5 years, 15 years, 25 years. Usually one province is more in the spotlight than the other. Right now, it's been Quebec for the past 10 years or so, attracting a lot more investment capital. The rocks don't care. The rocks are agnostic, but that creates opportunities for us staking properties in Ontario that otherwise might not be so affordable. So I'll tell you that one of our strategies is to acquire grassroots properties aggressively in Ontario right now, and ultimately always looking towards exit strategies. So the exit strategy for Val-d'Or Mining Corp is creating royalties in those grassroots properties. So these are three on which transactions were done over the past 12 months or so. DUCROS in Quebec is a nickel property. We retain a 1.5% NSR in a pretty large spread now. It was originally only 4 claims. Now it's over 280 mining claims, nickel-copper-PGEs. And that's going to be our main property exploration target this year with a 20,000 meter drill program. POWELL is near Matachewan, Ontario, in the Kirkland Lake area of northeastern Ontario. And that's a property that we did a small drill program on last year, financed by our partner, Spartan Resources, and the Bourdon prospect in the Ring of Fire, Northern Ontario, McFold's Lake, another property that we expect to have a lot more to say about over the next few months. And so these are the equity interests that we've acquired at the same time. So the NSR is the back end. That's what we're trying to create from day one. But along the way, to pay the bills and to allow arm's length joint venture partners to earn their way in, we want something, some consideration for that interest. And so these are some of the property interests and some of the equity interests that we've acquired over the previous 12 months. Progenitor is a private company in Vancouver going public in 2022. Juno Corp is part of the Rob Cudney network in Toronto. They're going public in 2022 as well. And very aggressive. They've already done 1 drill program on this property, and they're planning more for 2022. And Quebec Nickel. Quebec Nickel QNI on the CSE is part of the Dave Patterson Group in Vancouver. And that company has already announced a 20,000 meter drill program on our nickel property. And so this is it. This is the DUCROS property in northwestern Quebec. It's actually northeast of Val-d'Or towards the Quévillon area. Actually, it's a good story in its own right. 2 prospectors came through the door, literally with a bag of rocks. Could you assay these, please? And so we ran them for assays, and there were some interesting nickel and copper values. We did a property visit, site due diligence, collected a bunch more samples that actually came back higher than the prospector samples. So we optioned the property, and it's the only one of the 55 properties we've actually optioned from someone else. So quite unique in terms of our normal strategy where we find the properties and stake them ourselves. This one was 2 prospectors coming in with the bag of rocks. And now this will be the second drill program that we've done on DUCROS, and very much looking forward to that. It starts this month in January 2022. So Quebec Nickel Inc., QNI, will be doing 20,000 meters. They've actually announced that their financing was significantly oversubscribed, and I believe it to be in the range of $7.5 million, all of which is designated for this property in 2022. A classic battery minerals environment. So nickel, copper, and potentially a few surprises in the platinum palladium department as well. This is the gold property that we drilled in the fourth quarter last year, all work financed by Spartan Resources. Spartan is run by a very astute and very well-known geologist named Lee Barker. For those with good memories, Lee was actually part of Southern Era Resources during the diamond boom in Lac de Gras in the early 1990s. And I think pretty much everything that Lee has touched has had some success attached to it. So this is a small property in Matachewan, Ontario, originally staked by Sir Harry Oakes of Kirkland Lake fame. Not sure that we've heard the last of that one yet. The assay results were not very inspired in the first round, but that's the way it goes in exploration. You have to drill a lot of holes and test a lot of ideas before anything good comes from it. That was the first pass a couple of months ago. This is the property that I referred to in the McFolds Lake area, Northern Ontario, James Bay Lowlands, or the Ring of Fire. A lot of news coming out of that area because of Wyloo and BHP, who had a little bit of a tussle trying to get control of Noront resources. And so all of that has heightened interest in the Ring of Fire, including some announcements by the provincial government in Ontario, who now plan to develop access into that remote region. So that'll be good for us. And this has been a very good transaction for Val-d'Or Mining Corp to date, where we've got 1.5 million shares of Juno, and ultimately we'll be left with a 1.5% NSR. And again, this is a pretty large property, 288 claim cells. And a few words about Progenitor. This is the Vancouver group that are going public in 2022. They acquired 10 properties from Val-d'Or Mining Corp, and ultimately we've acquired 9.9% of their company as it's going public. So those are the kinds of transactions that we like to do with Val-d'Or Mining Corp. It prevents dilution to our share capital. That's the central theme. And ultimately, it's accretive for the company and hopefully our shareholders, and that we acquire shares, equity positions, and all of that leading towards the creation of royalties in what were our own properties. So shares outstanding, just under 69 million. Market cap in the range of $10 million Canadian. Price has been pretty stable between 13 and 16 cents over the past 2 months or so. We announced a small flow-through financing in December. It was immediately filled by one placee. So we'll be spending $200,000 in both Quebec and Ontario. And a few words about the board of directors and our management group. Dr. Jens Zinke, has been working closely with me all the way from Canadian royalties. So for 20 odd years, a good friend and pretty much a classic unheralded genius. Jens does all the heavy lifting and is a very astute fellow in so many ways. Rico, our chief financial officer, has been with our group for the past 4 years now. He came in through Abitibi Royalties and Golden Valley and has stayed with Val-d'Or Mining Corp. Michael Rosatelli, vice president exploration. He and I have been working together for about 15 years now, going back to the Canadian royalties days as well. And Michael has been there the entire time with Golden Valley Mines and then Abitibi, Val-d'Or Mining Corp, etc. And the board of directors, Louis Doyle was actually the director of the Montreal Stock Exchange. And so therein comes our regulatory and capital markets skill set. Deborah, who many of you know from Adelaide Capital, has certainly helped us with our capital markets presence, social media, this webinar, various other interfaces with investors, newsletter writers, etc. Deborah's been a real spark plug. She's created an enormous amount of work for me in the past 2 weeks. So thank you for that. Luke Shuchuk is a young guy, about 24 years old, representing his father to a certain extent, Bob Shuchuk, who was originally my key source on the IPO for Canadian royalties back when it was listed on the Alberta Stock Exchange, and who I believe has participated in every single financing we've ever done. Luke is actually living in London, England right now, graduated in economics from Queen's University about a year ago. He actually has versatile mining industry experience as well, having worked for Rupert Resources in Finland, worked in Red Lake, various other projects in the industry. And there you have it. So a pretty well-seasoned board and management team. In terms of what to look forward to over the next few months, self-funded exploration, $200,000, both in Quebec and Ontario. That's funded from our own treasury, grassroots project generation, new properties coming from that. We dress them up, trying to find partners who will spend the big expenditures on them. And two of those are on the right-hand side. So Quebec Nickel Inc. with the $7.7 million program. 20,000 meters minimum. The 7.7 million is actually able to do quite a bit more than that. All of it designated for the DUCROS property right now. And 4 million over 5 years in new transactions recently announced by Eldorado Gold. And so Eldorado have optioned 3 of Val-d'Or Mining Corp's properties, 2 of them in Ontario, 1 of them in Quebec. And that work is already unfolding right now. And Eldorado have been a great partner to date. And these transactions are more or less echoes of the last transactions that we did with Golden Valley Mines as it was being taken over by Gold Royalty Corp. So the Val-d'Or Mining Corp properties are in fact contiguous to what were the Golden Valley properties at that time. And this is more to show you that we're deliberately not only in gold or precious metals, but it's a deliberate strategy to be in both precious metals, base metals, energy minerals, battery minerals, etc. Not just to play with ESG themes and so on, but to adapt to changing market trends. So gold right now has been attractive. In fact, all of the commodities that we're looking for right now are pretty attractively priced. Zinc at over $1.60 a pound US, nickel $9.34 US a pound, more or less. Copper $4.50 to $4.60, very attractive prices, and gold in the $1,800 US range per ounce. 22.90 Canadian, very attractive prices for explorers and all of the commodities, but it isn't always like that. So it's deliberate that we step out of the box and look at uranium and occasionally diamonds and other commodities as well. Not intending to go into deep geology here, but this is deliberate, trying to show you how we construct some of the properties and ventures, how we try to attract arm's length joint venture partners. Why would they go through us when they could ostensibly stake properties themselves? And usually it's because of the amount of work and preparatory targeting that we've done that make it attractive for them to come in and in one fell swoop do a drill program, like DUCROS with the 20,000 meter program. This is a gold project in Northern Quebec, the Magoma prospect. The previous one was the Baden prospect in Matachewan, Ontario. Both areas with great geology. That's Michael Rosatelli in the bottom right on the Oregon prospect. That was a property visit we did in the 4th quarter of 2021. And again, just north of Val-d'Or, that prospect. And this is what our camp looks like in Northern Quebec, the Nunavik region on the Shootout prospect. So this is one we're in some early stage discussions with potential joint ventures and partnerships. We actually had some very good drill intersections returned from the work that we did there a couple of years ago, over 9 meters of 1% nickel and better, and multiple additional targets to pursue. So with that, I'm happy to take any questions. Easy to contact either by email or direct phone. Call me anytime. Always happy to talk about mining with anybody, or hockey, if that's your flavor. But very anxious to work with Deborah and see what some of the other contacts will be, and the newsletter writers that we're in contact with, and some of the other forums that you've been introducing us to. So over to you.
Okay, great. Well, thanks for the overview, Glenn. If anyone has any questions, feel free to put them in the Q&A box. And I guess I'll get started. So you talked a bit about how it's more attractive right now to stake ground and acquire property in Ontario versus Quebec. Can you talk a little bit more about that, why that is, and what the differential is?
It's extremely competitive in Quebec. And part of that is just because Agnico Eagle, Yamana Gold, I Am Gold, Gold Corp. And those are the majors. And then you go down to the mid-tiers, Westdome, Monarch, Globex, et cetera. The competition is pretty fierce in northwestern Quebec, the Abitibi. And so when claims do expire, it's not for long. They're immediately snapped up overnight or within hours. And that's not an exaggeration. That is exactly how competitive it is. Whereas on the Ontario side, same geology. The rocks don't know whether they're Ontarians or Quebecois. The rocks don't have a flavor, but the competition is significantly less. Much easier to take time to do due diligence, to actually consider what type of historical work might have been done before investing in staking. You don't have that time in Quebec. As soon as a claim expires, it's snapped up by somebody else. You do have that time in Ontario. And part of that is also another derivative of First Nations discussions. Certainly a constant topic of discussion across Canada, engagement with First Nations people, Aboriginal groups. But in Quebec, if we did one thing right in the 1970s, it was what's called the James Bay Northern Quebec Agreement. And that was how Hydro-Quebec developed the gigantic resource in the James Bay region. And to do that, they basically created land treaties with local Indigenous groups, both the Cree, who occupy James Bay, and the Inuit further north in Quebec. And Ontario doesn't have that process. So it's still complicated in Ontario because individual parts of the province, individual bands, individual councils, they have overlapping claims in much of Ontario. And so that's a complication that we don't see frequently in Quebec or at all. And so that helps explain why there's somewhat more time for staking in Ontario than in Quebec. The process isn't as well refined yet. And we are in discussions. We work with the local band council in Matachewan, Ontario, and Wabun Tribal Council in Timmins. But if you were to work in the northwestern part of the province, or if you go up to the Ring of Fire, completely different groups, completely different protocols, and it just takes longer. And so that helps explain some of the differences because the geology is virtually identical. But there is an order of magnitude different. Mind you, 20 years ago, Ontario was the more favorable jurisdiction and Quebec was the province that was having difficulties getting its act together. So these things change with time.
Would you ever look at regions outside of where you are right now in the Abitibi?
Definitely. We always look at new ideas and grassroots pie in the sky type ventures. Just because no one's ever done it before doesn't mean we won't do it. Those are the kind of things we do like. We always use the same process. So there is due diligence. We do use science above all to create the targeting, to vector our interest in the first place. But ultimately, it comes down to hunches. And sometimes you just get a feeling about something. How come they didn't do that? If they held it for that long, how come they never did the obvious, or at least what's obvious to us? So we look at these things with fresh eyes and we try to come up with strategies that haven't been done before. Because there's no point in doing what has been done before. You'll get the same results.
Agreed. And you talked a bit about your strategy with, selecting different commodities and being diversified in that way. You listed a bunch of commodities that have performed well over the last little while. Do you start to look at those as properties or properties that have been exploring for those underlying commodities? Do you look at those as like potential sales and you're looking to buy or stake claims in commodities that have not performed as well? Like do you do a value arb kind of when you're thinking about what you're staking and what you're trying to partner with?
Yeah, well, it's no secret. The best deals always come from the worst markets. So no kidding. There's no competition. Everybody's fallen apart. Bre-X comes to mind. That wasn't exactly a wonderful time for the industry, but that was probably when we were most aggressive at acquiring properties, the 2 years after Bre-X. And same thing with commodities. So we always look at the commodity prices, of course. And I guess because we're eternal optimists, have you ever met a prospector that wasn't? What's the point in being a pessimist? Oh, I'm not going to find anything today. I guess I'll stay home. That just isn't the way that early stage exploration works. So we do look at commodities that are out of favor, and we tend to look at them and look at the supply demand fundamentals and think, is that something that's likely to correct over the next few years? And if it is, then there's no reason not to be aggressive with acquiring new ventures. And that has worked well for us with nickel in particular. It was below $4 a pound a couple of years ago. It was as high as $24 a pound US more years ago than that. But when we started Canadian royalties, it was actually below $2 a pound. And so those commodity price gyrations are the opportunities in hiding. And so at that time, nickel was so low, we called it our platinum project because nobody wanted to hear about nickel. Palladium at that time was actually $1,000 an ounce US. So, people believed it. There was good opportunity to believe that there was platinum palladium based on historic work and assays. But it's a nickel project above all. And same thing for uranium. Fukushima was a devastating event for the uranium industry, hasn't really recovered to its historic highs since then. But elsewhere in our group this year, we've been pretty aggressive. We've staked properties in Quebec, in the Matouche area, the Otish Mountains in central Quebec, Elliott Lake, Ontario. We've acquired a very large land package around Elliott Lake, and elsewhere in Saskatchewan, Lake Athabasca. So we're aggressively acquiring properties right now and looking for more in all commodities, but not all commodities. We look at all commodities, but we don't stake properties for all commodities. I've never really been big on the lithium bandwagon, didn't really believe that it was going to be material enough for Canada in particular. So we've kind of stayed out of that space. But we are looking at some rather esoteric commodities as we speak and trying to figure out if there's an opportunity for a small company like Val-d'Or Mining Corp. The one thing you can do as a small company is move more quickly than a big company. So it doesn't take a committee of oversight to make decisions. There's usually just one or two of us, and that's all it takes.
Got it. Okay, switching gears a little bit, you mentioned some of the relationships you have with the First Natives group. I'm interested in some of the ESG initiatives you have in Val-d'Or. Would you be willing to talk a little bit about those?
Yeah, sure. Great source of pride. You won't find it on our website. I'm happy to talk about it in front of people so you can check your facts after, but we don't like to promote that because it looks kind of like bandwagoning. But some of the things that we've done and are doing, one of them is called Le Château de Marie-Ève. Marie-Ève was an Indigenous woman that was murdered in Val-d'Or a couple of years ago, and it was certainly an awful set of circumstances, and it brought to light the plight that many young Indigenous women face in Northern Quebec. And so, it's no secret that many of the Indigenous women in Val-d'Or aren't from Val-d'Or. They come from reserves and small communities further north. They leave their homes going to the big town, which Val-d'Or is compared to the reserves. And ultimately, because they don't have bank accounts, because they don't have education, because they don't have skill sets, they end up in trouble. So that's become a dominant theme in Val-d'Or. And the Château de Marie-Ève is an initiative that's trying to provide a safe harbor, primarily for them, many of whom suffer from substance abuse problems and other issues. And so this is a safe space funded primarily by the Quebec government, the town of Val-d'Or, and the mining industry, including Val-d'Or Mining Corp, before that, Golden Valley and Abitibi, Agnico Eagle and Yamana, and pretty much every service provider that's resident in Val-d'Or. And so we're opening up a 50-room space in the month of March, which is right in front of us. Pretty excited to have been a part of that from its inception. And I think that's going to be a great project, mostly because it takes a longer view of what could work for people who are the most vulnerable, including providing education and the mining companies providing jobs, along with supervised staff and opportunities to help them cope with some of the other substance abuse issues and so on. So that's one initiative. Another one is called FRAN, Fonds Restauration Nunavik Abandoned Mine Sites Fund. So in the very northern third of Quebec, in the early 2000s, about 2003-04, a report came out that had cataloged over 600 abandoned mining sites filled with garbage, old fuel drums, camps, propane canisters, batteries, you name it. And, in northern Quebec, where there are no trees, above the tree line, an empty fuel drum, you add wind to that, it'll blow, and where will it stop? Well, usually it's a river and the first place where there's water. So you find hundreds of fuel drums in creeks and rivers. And so that was obviously undesirable set of circumstances. And the Inuit weren't very happy with the mining industry after having put that report together. And so we thought that was a good opportunity to stand up and just be a leader in it And so Fonds Restauration Nunavik is actually 50 public mining companies together with the Quebec government. And we've cleaned up all of the priority 1 and priority 2 sites, which account for over 200 of the 600 sites. And the only ones that are left are abandoned platforms, foundations for tents and things like that. All the propane canisters, all the fuel drums, all the batteries, all the dilapidated equipment has been flown out and maritimed back to Montreal, where it's been disposed of. We're starting a parallel initiative in the Cree territory of Quebec, James Bay area, called FRAC, Fonds Restauration Cree. And that one is getting underway, hopefully as soon as COVID restrictions are lifted. One of our main problems for the North right now is travel between regions. Omicron has reared its ugly conditions, and that's really put a damper on travel between different parts of Quebec. And so that has a negative or deleterious impact on some of these initiatives, but the funding is in place. And usually it's the opposite. It's not the logistics that are hard, it's the money. We've actually put the money together and we'll be continuing with those initiatives. And I could talk all day long about other things we've done in the far north, some programs to keep kids in school with hockey financing and so on. Basically, the idea was we pay for the equipment, we pay for the registration, we pay for the tournaments, we do all that, but they have to be full-time in school. That worked, and there were quantifiable metrics that supported that program was great. We did it for girls, not just guys. And so that was a really good program in the Nunavik region. And those are the things that you won't find on our website, but I'm always happy to talk about them. They're kind of ESG straight from the heart in the communities.
They sound like wonderful initiatives. It sounds like you have deep roots in the Val-d'Or community. Can you talk a little bit about your personal history there and whether this is advantageous in terms of securing different claims and structuring different deals?
I moved to Val-d'Or on graduation day, and I don't have any family there. And other than my 3 daughters who were born there, or at least 2 of them in Val-d'Or and 1 in Kirkland Lake, Ontario, no other direct family roots. So it was just clear while I was in university and wanting to do this prospecting thing that there were 2 obvious places. One was Dawson City, Yukon, and the other was Val-d'Or. It had to be one of those 2 places. And I discounted Timmins, not because of geology, but only because it seemed that there was a fiercely competitive environment and it would be much harder to break into. You know, the language thing in Quebec, that seemed to be an obvious opportunity for an Anglophone going to Northern Quebec. And as the stock exchanges started to do their consolidations, where, you know, it was the VSE, the ASE, the Montreal Stock Exchange, Toronto, they became CDNX, then TSXV, et cetera. And so now you have one exchange, and it just seemed that as the capital markets were getting their act together, that there was an obvious place to start a grassroots explorer, and that was Val-d'Or. So glad I went. And it's been my favorite place on the planet for 36 years. And can't wait to have you come up with your team, because I know you'll probably never go back to the city after a visit to Val-d'Or.
I don't know. I don't like the cold as much as you.
It's only minus 34 today.
I've never been to Val-d'Or. I've been to Rouyn-Noranda, which I assume is similar in terms of coldness. But yeah, I'm looking forward to that. Maybe March, April, we were talking about it, Omicron dependent. I don't see any questions from the audience, but I had one more question. You mentioned that oftentimes when you option out properties, you take stock as part of the transaction. What do you do with the stock? Are you long-term holders? What's your policy around shares that you hold in other companies?
Well, it actually gets debated internally and at least quarterly, but sometimes gyrations. If there's significant volume in one of the equities, we talk about it, we're aware of it. I mean, we track them, obviously. That's part of our CFO's skill set and obligations. So we look at them all very regularly. We've had positions for the entire time period of the various companies. Golden Valley has shares of Sirios that we've had for more than 12 years. That came from the Chichu prospect in James Bay. We sold a bit of it when Sirios had a very good period of time where they significant volume. The price went over $1.40. It was 10 times their VWAP. And so that was just an opportunity to sell a little bit. Usually we don't. It's indirect leverage. So the NSR is direct leverage into the property. That's what we want. That's what we do all of this for, is the NSRs. But the equity positions are indirect opportunities. So the company might not have success on the property that they've optioned, But like most mining companies, that's just one. And there could be others. Maybe it's Africa. Maybe it's South America. Maybe it'll be another part of Canada. But companies go through new management, new cycles, and sometimes those positions are better retained for the legacy in the future than the one in the past. So we're not very aggressive sellers. Usually we have an important stake. We usually try to make sure that it's 9.9% on day one of the public company, but every one is a case-by-case circumstance. So, some of them are better than others. Some of them drift away and you wish you had taken advantage of divestment, but most of them get second and third chances. So we're pretty patient.
Okay. I don't really have any other questions for you, Glenn. Is there anything you wanted to talk about today that we didn't cover?
No, I just think that 2022 is going to be a very fun year for Val-d'Or Mining Corp because one, I think it was no secret that I was pretty focused on Golden Valley and Abitibi for most of the past few years. Well, that's gone. And so Val-d'Or Mining Corp is actually my day job now. So that's a way of saying it's grassroots 100%. So we talk the talk, whatever the expression is. This is a really good opportunity to dust off some of those properties that we thought so highly of a few years ago, but didn't have the capacity to work on because we had limited bandwidth as well. So this year, because of the Eldorado Gold joint ventures, because of the Quebec Nickel Inc. financing, because of the amount of drilling that's planned for our properties, because of the flow-through funding that we did in December in both Quebec and Ontario, this will be by far the most active year we've ever had since listing for Val-d'Or Mining Corp. And a lot of that will be drill holes. So hopefully that'll be good for our shareholders.
Can you remind me when the company did list?
July 2011. It was the same date as Abitibi Royalties and Uranium Valley Mines, as it was called then. And the original name was Nunavik Nickel Mines for Val-d'Or Mining Corp. We never consolidated, but we changed the name. Nickel was just too tough 10 years ago. And we just couldn't interest anybody in the nickel properties in the far north. So changed the name to Val-d'Or Mining Corp and back to, starting point, grassroots 101. Here we go.
Well, nickel certainly had a really good move over the past year. But Quebec nickel drilling should be really interesting. Yeah, thanks for presenting. I think the things that really drew me to the company are really top-notch management, like tight share structure. As you said, you haven't done a consolidation. You've been public for 10 years, and I think you have just shy of 70 million shares out. You've been able to finance through deals, proper divestations, options, et cetera, not just through hitting equity capital markets, which I think is a positive, maybe impacts your ability to get interest from some of the brokers, but certainly excited to get you some fresh eyes and really get the story going this year. I think it's exciting times. I appreciate you presenting, and hopefully our audience will be seeing a lot more from Val-d'Or, both on the marketing front and the news front. And if anyone has any follow-up questions, please feel free to reach out to myself or to Glenn. Happy to get those answered. And thank you, everyone, for your time. And Glenn, thanks for presenting.
Thanks for the opportunity. And I'm really looking forward to doing some of these other initiatives that we've been talking about. So let's go get them.
Yeah, it's going to be exciting times.
All right.
Thanks, everyone. I appreciate your time.
Thank you.